On the back of the US dollar's weakness, analysts urge traders not to rush to get rid of the US currency. As the main argument, experts refer to the situation on Forex last year. At that time, the currency market was hit by a panic, hasty sell-off of the US dollar because traders were convinced that the Fed Reserve would soon lower interest rates. But nothing of the kind happened. The American currency rebounded, and hotheads had to count the losses. By the way, the theme of moderation and well-rounded decisions has been the message in all, without exception. Recent speeches by Fed policymakers. Even though some policyism looks highly probable this year due to the lower inflation, expectations about the size of these rate cuts may be greatly overblown. Most Fed officials advocate for slower and smaller rate cuts. Apart from the highly anticipated first easing of monetary policy in more than 4 years, the US dollar may react to political news about the presidential race in the United States. And today the Democratic Party is opening the Congress. According to the latest polls, the odds for Vice President Kamala Harris to win are 58% compared to 45% for Donald Trump. These figures are the exact opposite of those during the rivalry between Biden and Trump. Moreover, the victory of the latter is treated on Forex as an opportunity for the US dollar's growth. In the meantime, the US dollar index sank to a low of 102 points during sell-offs. The instrument opened on Monday, trading lower in a narrow corridor of 102.00 to 102.50. Over the past 4 weeks, the dollar index has lost about 2%. However, market estimates for rate cuts at the Fed's meeting in September and for the rest of the year are likely to be very high. Market participants assume a super soft landing for the US economy. Moreover, it may not happen at all, so a recovery of the US dollar is still likely in the short term. As it commonly happens, risky assets, including currencies, benefit from the weak US dollar. For example, US stock indexes closed the previous week with the best performance of the year. And today, the S&P 500 index opened higher within an intraday corridor of 5,525 to 5,561 points. The euro-dollar pair notched its highest price in more than 30 weeks. On a Friday, the currency pair traded at about 1.1053, confirmed traders' buying interest. But the price needs to settle about this level to enable the euro to reinforce the uptrend. If this outlook comes true, the bulls will have a clear path to reaching the highs of 2023. Otherwise, the instrument is likely to remain within the current range of 1.0950 to 1.1050. Moreover, no one doubts that the European Central Bank will also lower its interest rates. However, the Eurozone regulator intends to take a data-driven and meeting-by-meeting approach in its further policy decisions. ECB President Christine Lagarde underscored at the last press conference that the Central Bank does not undertake any preliminary commitments to any specific moves on interest rates. Markets are now anticipating the upcoming decision of the People's Bank of China on a key leading rates, which is due to be announced tomorrow. The economy of the world's main buyers of commodities still raises many questions. Prices for new homes tumbled to the lowest level since June 2015. Industrial production growth slowed to its lowest level since March this year. Besides, after 3 months of stability, the unemployment rate began to rise. The ailing economy is forcing China's industry to bring down crude oil refining output. That's why China is phasing down oil buying. In addition, oil is under selling pressure due to the downgraded demand forecast for the rest of the year from OPEC and the International Energy Agency. The updated forecasts were published at the end of last week and have already managed to push the Brent price below $80. On the other hand, oil is receiving moderate support amid potential supply disruptions due to the simmering geopolitical tensions, and this indicates overall bullish market sentiment. However, from the point of a technical analysis, the fact that the price slipped below $79 signals redistribution of trading forces in favor of the sellers. In turn, this may indicate an increase in the short positions in the future. In this case, the concentration of trading forces at around 80 will lose its meaning. So the price will hit towards the recent local low. As for the Russian ruble, its attempts to restore have been to no avail. As a result, the dollar-ruble pair sticks to the level of 90 rubles, and this indicates the bullish momentum of the greenback. So, if the price settles above this level, traders will increase long positions on the US dollar. That's all for today. We continue to follow developments in financial markets. Subscribe to our channel and follow news with us. See you soon. Markets are overwhelmed by turbulence again. Who would have predicted that